As you know, before starting, may I just draw your attention to the disclaimer that I know you can see on your screen. Please, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And as always, we are going to be looking at the markets through the prism of volume price analysis. Volume price analysis is the study of charts using price action and volume. But David and I, we take a slightly different approach to the forex market. Although having said that, since we started with what we call the 3D approach to forex trading, I can't read a piece of forex market analysis without, well, certainly the fundamentals being mentioned, but more and more the relationship and the interaction that you can get between the capital markets. And we're at one of those points in the kind of trading cycle, if you like, where everything is coming together. So we have the chart analysis based on volume and price, but we also draw into that the context of what's happening on the fundamental landscape, but also much more and more what is happening in related markets, particularly with currencies that are linked to commodities. And we'll go through that as we go along and have a look at some of the performance of the what we call the risk currencies and the commodity currencies. Volume VPA, those I know we've got. I know people who have read the book come along. We've got some of our quantum trading users. These are the indicators that we've developed to help us support the methodology, just makes life easier when looking for potential signals, trading setups, if you like, on our charts. But VPA itself, that is the foundation methodology. And as I said, it's volume, price action. We use candles, not bars, so it's candles and candle patterns, and so important, support and resistance. Those are those areas on the chart where the price is it's aiming for, and where it is likely to at least pause and potentially reverse. And to help us with those, if you like, those particularly in forex, with those flows that are going into the individual currencies and the point where potentially they are going to pause and reverse, we have developed these very clever indicators that we call the currency dashboard. They are available to purchase individually. We start with the currency strength indicator. Call it a strength indicator, but actually, if you like, it's more of a flow indicator, because we want to see where the buying or the selling into what are the individual currencies. Where do you have the strongest buying? Where do you have the the strongest selling, as it were? Because what you want to try and do is you want to match that up in a pair, because that's where you're going to get a really nice move, where you're going to get strong divergence. You've got strength on one, a strong, great movement on one side, matched by great movement on the other, going, in opposite directions. That doesn't mean that pairs don't move when, if you like, you get a much more asymmetric move. In other words, maybe the driver is take the British pound, you have overwhelming buying of the British pound. Sometimes all the pound pairs will be dragged up, but often it isn't. And this is why we have the currency matrix, because that actually helps us to pick out the individual currency, so the British pound, but all the pairs, so we can see which of the pairs is best performing, whether it's going up or down. Currency array looks at the strength of that move, the strength of trend, and the currency heat map looks at the moves in the pairs in multiple time frames. And we've got some really exciting news about the currency heat map for Trading View. Ironically, because of some restrictions to do with the coding, the code that's available for Trading View has actually allowed us to make, we think, a very neat version of currency heat map, and David can explain that in more detail. And just to round off, we also have a program, an educational program for forex traders that takes the VPA concepts and brings up in all those other elements that you need to succeed. And to top it off, it's the cherry on the top of the cake, if you like. You also have the option, if you are a student, to you have the option to take up what we call the funded forex program, and that is where you can trade not your money but our money at absolutely no risk to yourself. And that's something that David can explain later as we go along. I'll also go through, I've got actually the inside of what the forex education program covers. There's I'll give you a little sneak peek. This is what we call the mechanics of trading module. It's one of the 5 modules that come with the program. We can see psychology, fundamental, relational, technical, and the mechanics really kind of pulls it all together. So that's that. Very, very quickly, that's the site for the indicators. You can see now we've got TradeStation that is now fully on board. Right, to the charts. Before we do, have a quick look at Forest Factory. It's a bit of a day today, actually. Today is the second day of Jay Powell is up before Congress. You know, if you, as I said, if you trade Forex, you always keep an eye on what's going on in other markets, and certainly we'll be talking about it more in our the next webinar we're doing today, which is looking at the futures market. And there's some very interesting price action going on there before he was speaking and while he was speaking. But that is his second day. As I said, there's all sorts of undercurrents going on in the markets generally. So you know, we're kind of at a bit of an inflection point, but that's the sort of highlight for the day. I think we've got a load of we've got certainly got FOMC members speaking, and I think, do we have anyone from the, oh yes, we've got the monetary policy report readings of hearings. That's obviously for the British pound. And I've also got a financial juice calendar here. Those of you, that's it. What have they got? I think they pretty much cover everything there, what's going on. That's it. So it's just to give us an overview of what is happening what is happening now and what is coming up later in terms of sentiment. Well, is up 18, not a huge amount. It's still, our overall view is it's still looking a little bit fragile at the moment. I mean, the market, they say markets are forward looking, and you know, even as while the virus was raging, the market was going higher, but the vaccines were coming on board. So it was, you know, markets looking forward to a time when we can all return to a degree of normality. The Nasdaq has been a huge sell-off in tech. That's what we're going to be talking about in our next webinar. Very interesting candle pattern, as we can see here from yesterday. This was the drive higher. So, you know, as I said, it's an interesting time to be a trader. There we are. That's very, very quickly. Let's have a look at my charts. Right, I'm actually going to start with the CSI here. This is MT4, by the way. I've only got MT4. I have got NinjaTrader up, but only because with NinjaTrader, there's one thing about MT4 and 5 is trying to get a timestamp is you have to, it's a little bit annoying. As you know, you probably have to take 2 hours off to get your local time, what is sort of printed on the charts, and which is, you know, quite annoying. I think there are some, there is a bit of software out there that you can download, and that will give you a, real time. Maybe it's something that we'll have a look at for ourselves, because I love MT4 and love MT5, but that is one of the most annoying things about it. Right, what I said earlier, what are we looking at the moment? I have 3 time frames here. Multiple, when we talk about in VPA, we talk about time. We don't just talk about the individual chart that you are looking to trade. We talk about multiple time frames, and multiple time frames are really, really important. We suggest looking at 3. So you have the chart that you are looking to take the trade on, possibly in the center, and you have a faster time frame and a slower time frame, and the slowest time frame is what I like to call your benchmark. It's if you like, it's what you're either trading against or trading with in the faster time frames. Now, you know, you can make these up as you like. If you can't cope with 3, then you should have at least 2. In other words, the one that you're going to be trading and one slower, so that you can see whether are you actually trading with the trend that is currently underway in the slower time frame, or are you actually going to take a counter a trade counter to what is the dominant sentiment in the slower time frame, which is perfectly okay, but it comes with certain conditions. One of them is that you could be possibly taking on more risk in the sense that you are, swimming against the flow, as it were. But looking at the setup on the chart that you're trading, it's a perfectly valid setup. That everything looks good. You've got your candle patterns. You've got the CSI here is telling you that it is a reversal is coming along, and away you go. And I've got a really nice example here. So if we look at the 50, say you're only having two charts, so you've got the 15-minute and you've got the hour. I like the hour for the forex market is because we have these different sessions and you have different participation levels in the session, but the hourly chart just gives you a really nice overview of where it's been, where it is at the moment, and potentially where it is going, where it is like to carry on. And we can see here, if I just draw your attention to yesterday, this is what we don't like to see. This is what I was trying to say to you earlier, where for a move, we really like to see some strong divergence, one moving in one direction and one moving in the other. And the currency that was the best performing yesterday, and certainly was actually the New Zealand Swiss. Not a currency that we often talk about or see, but the move in there was really very, very strong. I've actually got a because this is quite, just to give you an idea, what was the date yesterday? Day 23rd or the 24th? 23rd, right. I took a screenshot actually, just to give you an example of this, because there we are. Right, there's also, this was at rollover yesterday, and I thought, right, I must take a screenshot of this, because first of all, we had of the currencies that were moving, we could see the pound was being bought, we could see the New Zealand was being, we can see this massive sell-off in the Swiss franc, and there was some movement here. But what was also really annoying was this in the middle. So if you're a trader that perhaps likes to trade a euro dollar, because euro dollar is, we all know you get very, very competitive spreads on euro dollar, you would have had a pretty tough time yesterday. Because, why? Because when you look at the dollar and you look at the euro, there were great periods of time when they were moving in the same direction. So what these lines tell you, there was flows into the dollar, there were flows into the euro, but there was no divergence. And what we want as traders, we want divergence, because in divergence comes trends. Now, it looked like there was a divergence came later. So if you are, so what this indicator tells you is potentially, not necessarily what not to trade, but tells you that possibly if there is a trade, you're going to have to, it's going to be a bit of a grinder, and there's just nothing you can do about it. But let's look at the ones that were moving. And as I said, you had the New Zealand Swiss. Now, the matrix, as I said, it ranks the pairs from the strongest to the weakest, and not just on an individual currency. You can highlight. I'll show you on the live matrix. You just highlight it to help you establish which of, say, the New Zealand pairs or the pound pairs were moving. But what's more interesting is look at the values. The values for the New Zealand Swiss was 87.8. That is actually really, really high for the hourly chart. So we know there's been a tremendous move in this particular pair. Now, if you caught it, fantastic, well done to you, and well done for making some great pips. What it also tells you is that because it's reached this really an extreme, this is a market of mean reversion. You get these, in other words, price expands, and then it's like an elastic band. It expands and then it snaps back. It goes back to the mean, if you like. Bollinger Bands work on standard deviation. Sometimes you get one standard deviation, two standard deviations. It's not uncommon, and if you get the more volatile pairs, you will get more of a move. With volatility comes all sorts of other issues, but the way this market works, it's mean reversion, which is why it's such a great market to trade. Currencies they're going to diverge and they're going to come back, they're going to diverge, they're going to come back, and what we want to do is we want to catch those moves at the points when they are moving. Whether you want to catch that move on the reversal, or whether you want to try and join a move that is currently underway, really is down to you. And it also depends on your time frames, because you can join a move that is underway, or in a slower time frame, you find, you possibly get a pullback, a correction on a faster time frame, which is why it's so important to use multiple time frames. So this was how we left it yesterday, with the values there and the currencies that are actually moving. So we come back today and we think, right, okay, well, what's moving? Well, the Kiwi, as I said here, is still rising. The values are not quite as extreme as yesterday, but the one that's been the best move so far. So what we do is we can simply take that, isolate the individual currency. Oh, by the way, you can also bookmark a currency pair. So if you're already in a trade, you can bookmark the pair, say on a faster time frame, just to keep an eye on it. So we've seen this extreme today. We've seen the Aussie moving higher. We've seen that Swiss franc is still down here. The yen is still down here and still moving lower. That's because equities the indices are looking quite positive. The market's feeling positive. Obviously, Powell said something to cheer everyone up yesterday. So you think, okay, well, I can choose any of those currencies and see, well, which of the pairs am I getting an equal flow into all the New Zealand pairs, or is the flow restricted, if you like, to one particular pair? And they're a bit all over the place at the moment, because earlier on, when I looked at the New Zealand, it was much more consistent. There was very consistent flow into the Kiwi. Now let's look at the yen. The yen pairs. The nice thing about the yen pairs, because the yen is the counterparty currency in the pair, it's nice because you can easily track them, and you can see there's quite a big divergence here. Obviously, the one that's had the biggest move so far is New Zealand yen, and we can see how overextended they are on the hourly chart. Then we've got euro yen, which is where, well, the euro is moving high. So possibly if the yen carries on lower, maybe there's an opportunity to join this. The euro seems to sort of be picking up, as it were. CAD yen, and then the values, therefore. What we really want to, it'd be wonderful if they were all, as I said, you've got this consensus in what we call the individual currency, the matrix of the currency. Now, I said to you earlier, joining trend, or we've got the 15 and the hour. 50 minute. So we've got, we can see here, the yen is still falling, had a bit of a bump higher earlier, but it's still moving to oversold. And by the way, things can stay oversold a lot longer than you and I can stay solvent. So, just because something is at such an extreme, it doesn't mean it can't sit there for some time. And we've seen that with the British pound lately. So look at the yen. The yen is moving, and you look at the yen, well, okay, I think that's going to move higher. And we have had a little move higher. We can see here on the 15, we can see here on the 5-minute chart. So this is 11:35. Let's have a look. It's probably at around the same time. Let's have a look. Yeah, 11:30, 11:35. So, there was an attempt of the yen to rally. Now, in this move higher, in this tiny move higher, was there enough of a potential trade in one of the yen pairs? Well, we'd have to go and look at the chart, but you have to bear in mind that on the hourly chart, it doesn't look as though it wants to, turn higher. And we can see this here. Why? Because, it's kind of rolling over again and rolling down again. Because I'm on the faster time frames, if you would, if you had the hour as your fastest time frame, you'd be looking at the 4 hour, and then the daily, you would get an entirely different picture. So if we stay with, let's look at the Swiss franc. Have a look at the Swiss franc. So what you do is you can highlight the individual currency and look at the pairs and say, well, which of these Swiss franc pairs, in fact, which of these Swiss franc pairs is potentially going to give me a trade? And you just look at, but if they're kind of spread out all over the place, you wouldn't look at the Swiss yen, because, as I said, they are moving in the same direction. The values are also very, very low. The one I would possibly start to look at is the British pound. Now, the British pound's been really interesting because, as I said, it's been it's been heavily, heavily bought. I have to say, analysts don't know why, because the whole narrative about the British pound and Brexit is that, it really was it was a basket case, and it was going to be sold off from the beginning. Since the beginning of the year, all it's been done is being bought, and kind of confounded people. What's also been interesting about the British pound, certainly overnight, is this, and I must, sometimes these things happen and we have no idea why they do, but people who know more about these things than we do, if they haven't got a reason for it, just look at the charts and we trade accordingly. Right. That actually happened in Asia, which is really, really unusual. And if we look at in fact, if we look at cable, there we are. Where is it? British pound here. The only time I ever really remember something like this happening was during Brexit, David, wasn't it? Yeah. When it was in Brexit, it's this. This is what happened. As I said, the British pound has been moving steadily higher for some. We've said 140. We've actually said maybe potentially going up to 145. Suddenly, in the quietest of quietest session for cable, this was about 11 o'clock last night. Whoosh! It absolutely rushed up, as we can see here. Volatility candle triggered massive wick to the top of the candle, which of itself will tell you that this is now weakness. Why? I don't know. In fact, nobody knows. It just these things happen. So we had, from a chart perspective, we then had the retreat into the spread of the candle. Obviously, we had that sell-off there. What happens now is essentially this volatility candle, because the volatility candle, the way this indicator calculates it is based on average true range. What it's telling us is this price move is outside of the average true range for this particular, for cable in this time frame. And when that happens, we kind of know what is going to happen next, and we've had this instant retrace to within the spread of the candle. The wick to the top of the candle would also tell us that this was unexpected, and also the volume underneath it here for the height of that candle. Now, admittedly, that was in Asia, so we read these bars under here in the context and relative to the session and the participation level. So it was high volume, which was probably, in keeping with the time that this happened. So we've had a retrace, then we've had another attempt to rally, but it looks like it has actually rolled over. And we have levels, as I said, price-based levels that we have on Camarilla. I have volume-based levels, but the levels that the low and the high of the volatility candle is also a level in itself. Now, that all happened, as I said, most of us here today would not have been trading this session. So given what is happening now, let's go on to the daily chart here. How that has translated on the daily is obviously we may be getting a shooting star on the daily chart. So possibly cable, is now going to come off. But down at the coal face, if you like, down at the granular level, where we look at the 5-minute, the 15-minute, and I actually have a Renko here. And there was a question about the value of the values of the Renko. I have actually set this to 3 pips. But with the Renko indicator that comes with that we've developed, you have 2 options. You can either set it to a fixed value yourself, 1, 1.5, 2, 2.5, whatever you want, or you can allow the indicator to calculate a value based on average true range, or you can run one with one and one with the other. It's entirely up to you. So this is that. As I said, that part of that shock move higher, and at the moment we've got as I said, the move lower, and this is where your levels come in. As I said, you're within the volatility candle, but once we've got this breakthrough here of the R6, you have the potential entry points using Renko are when you have a clear match of the trend dot, which is, as the name suggests, looks at how the trend is developing, and Renko gives you a beautiful geometric look at a trend. You've got the trend, you've got a little bit of congestion, then you've got the reversal. So that's your primary trend. You did have this secondary trend lower, excuse me. Understanding about trends, primary trends, secondary trend, micro trends, are all part and parcel of what's included in our program, and is a huge part of technical analysis, but also of VPA. But if we look back here, if we take this, let's start at this one here. So this is our, this becomes the primary trend because you had this break from this correction. So if you take that as what we call a primary trend, this is a primary trend higher. We have the match of the trend dot and the trend monitor. And we just allow, and what we do is when you're in a trade using a Renko, you just let the Renko tell you, just leave it to do its thing, as it were. Now, you will then get a change of color, which we do here, both in the trend monitor and in the trend dot. So we had a very, very short consolidation phase up here prior to the reversal. But if you like, this is, you never know. We never know at what point is this an actual reversal, or is this simply a pullback, a correction? As I said earlier, a potentially tradable pullback and correction, or is it a full-blown reversal that is actually going to come down? And no, it did actually offer not a huge amount, but it's still something that was tradable. Why? Because the trend monitor went bright red, and this was also bright red. But even in the pullback, you then get the micro trends, and that is what you're always having to consider as a trader. So if you take that as your primary, we did get a secondary, and then the primary, as you said, clicked up. And we would look at this in conjunction with what is also happening on the chart. And yes, you do get these periods where you get the change of color between the along the trend monitor. It's not clear whether that is actually going to continue lower, and this is where your levels come in. This is where levels become hugely important. You can see here that the R6 is providing the support. So each time it has tried to fall, it has supported and gone back up. It's come back and tested it and gone back up, come back and tested it. But actually, the final break of the R6 is what we're seeing now, and then we're moving lower. And this is now, if you like, a nice primary trend lower with a little bit of a pullback that we can see here, and we just now track it using the level. So how does that actually play out in the on the chart here? Well, as I said, you're going to get the wicks and the candle and candle patterns. You don't get that with a Renko. What's interesting is this level here, which was the R6 on the Camarilla, was actually just below our volume point of control. I said earlier that we use support and resistance, not just price-based, but also volume-based support and resistance. This is based partly on volume at price and also market profile. It's a combination of the two concepts, the volume point of control. The volume point of control is where you have had volume transacted over time, and it creates congestion phases. As we say in the book and we say in the program, congestion phases is where trends are born. So having a look at the Renko chart, that we saw that much more geometrically and much more cleanly. Looking at the time chart, we can see exactly what the price action was trying to do. It's trying to basically move away from the volume point of control. Failing, let's be honest, it was failing. We can see here it moved higher, then came back, moved lower, then came back, and then we do get the break once we get the move away from, as I said, the R6. So we have this here, and where does it go? It goes to the R4. What happens at the R4? It congests. We had a little bit of a sideways move on the R5, which we would expect. Now, once it goes past the R4, where is the next level? it would be the R3. These levels, this band here that you see at the top, at the bottom and the top of the volume point of control, we call them like volume bands. They're kind of boundaries, if you like, but they also act as support and resistance for the price action. Now, at the bottom here, we have the two lines that represent the individual currencies, and we know we're in a congestion. Why? Because the lines are moving in the same direction. So as I said, the methodology itself helps to explain what is happening in the price action, what is likely to be happening next. The indicators then support that, and also, you know, they give you a sense of, they take away a certain amount of the uncertainty that, you know, which comes with trading. It's part and parcel of trading, and whether it's forex or, you know, it's just uncertain. But what the methodology does, and what we've tried to do with the indicators, is to try and take away or take the edge off that uncertainty, because, you know, this market is a behavioral market. You know, when certain levels are reached, traders, we know our fellow traders are going to react in a certain way if it's a 0 and a 5. And having price-based support and resistance, having volume-based support and resistance, we kind of, yeah, okay, it's got to the R4. Yeah, okay, we know it's going to congest. Yeah, okay, it's fine. You know, and we tell ourselves, and that puts us in a much more relaxed and a more, as I said, our emotional state is not so dialed up, as it were. We're constantly, oh my goodness, do I have to get out? Do I have to get out? No, you can sit there and it will be much more comfortable feeling, you know, that you should get from trading, because you should enjoy it. Right, what's happening on cable now? As I said, we've got some support here. What's interesting is the dollar is turning round, it's turning down, but so is the British pound. So, you know, this could carry on lower, but it is at this support here, volume-based support. Now, what's interesting on the hourly chart, we are still within the volatility candle, but where is this heading to on this time frame? And the key level here is the R4 on the hourly chart. And the reason this is, you get a slightly different levels on the different time frames for Camarilla, is because the indicator works in a very clever way. In time frames up to but not including the hour, it refreshes, you get new levels every 24 hours. On the hourly chart, these are your weekly levels. So you know, you've already got areas on this price-based levels on this chart where this pair potentially could either be aiming for or and certainly pause. And it's interesting that, as I said, the third level and the fourth levels are probably the two most important levels on the Camarilla protocol. Right, so I know where that's kind of going. I've got to turn, I've still got selling on the British pound, and just have a look at, I think I've got it here. Let's have a look. Let's move that to the hourly chart. Right, let's have a look, see what the British pound's doing. Right, what does it tell me? Well, the British pound, the sell-off in the pound, the cable, it's not been the strongest sell-off. The strongest sell-off has been against the New Zealand, but it's not surprising given the, you know, how strong the New Zealand is at the moment. So we're not looking at pound New Zealand at the moment, but it gives me, it ranks the strength of the selling, if you like, in the British pound. And what can also happen is, if the British pound is going to carry on selling off as we come into the New York session, what you find sometimes is that sentiment towards the British pound, it's been sold off so strongly against the dollar, for example, then that selling will then perhaps pause there, because, you know, the sentiment will change towards the dollar, or it will go into a congestion, but the selling pressure will be picked up by one of the other pairs. Maybe the pound CAD, because the Canadian is much more you know, a currency that is traded quite heavily in the North American session. Right, I'm going to stop there because I've gone on far too long. Apologies. Let David have a say. I don't know what he's been looking at, but I will pass you over to him immediately.
Thanks, darling. Hi, everybody. Good to have you with us. Hopefully you can see my screen. Hopefully you can hear me. I've actually managed to put my microphone on, so there we go. I've actually got 3 platforms running here. I've got NinjaTrader, I've got Trading View below, and I've got Trading View over on Trading View on another screen. I just thought I'd pick up on what Anna was saying about the yen as the counter currency, because you see it most clearly and most elegantly, I guess, on the currency array, and you can see it in action here. This is on the 5-minute, the 10-minute, and the 15-minute time horizon. You basically have got, not only do you get a visual representation of sentiment, because obviously the yen is a sentiment currency, so we're constantly monitoring it for buying or selling as to whether it's a risk on or risk off environment that we're trading. It also gives you a sense of the strength in terms of whether that buying or selling of the yen is universal. This is on 5-minute. As you can see, whilst these are all pretty strong, the pound yen down here is actually at the horizontal and is starting to dip below 0. So clearly what's self-evident is the strongest buying and still remains so is certainly the New Zealand yen, which is up at the top here on all 3. It's the steepest slope. It's up at the top of the ranking ladder here on all 3 time horizons, so it's pretty strong. The sentiment towards the yen is also pretty strong, but it's starting to wane a little bit in pound yen and Swiss yen, and that's because those 2 currencies themselves are starting to sell off. But nevertheless, you get this sense of where the strongest trend is, and also the strength, the universal sentiment towards that particular currency. This is in terms of the yen. In other words, am I trading with the universal flow or am I trading against the universal flow? And most times you want to be trading with the universal flow, because if the market per se is selling yen, then you want to be selling yen as well. In addition to that, what this also gives you, it gives you a second perspective on where to go and dig out potential opportunities, because in the ranking ladder down here, in the second column, it also gives you a heads up as to which currency pairs, as opposed to currencies when we're looking at the CSI in isolation in terms of the currencies themselves. Here we're looking at the currency pairs and which currency pairs are coming up to either an overbought or oversold condition. You can see down here we've got pound CAD, pound New Zealand, potentially oversold. They've gone bright red, so they've come out of this darker red with the brackets around. The brackets have gone and we've gone into bright red, and the same will be true up at the overbought level up here. This is what would happen. These would start to go into bright blue and the brackets are removed. So we see for sure that we're starting to get some potential setups. Now, I know a lot of you come along regularly, you know what I'm going to say. You know, that's where I'm always looking. I'm always looking at the extremes. I'm always looking to take reversal trades, but they come at a price. And the price you have to pay is patience. And you also have to put a bigger risk profile on the table, because you cannot go into these situations with tight stop losses. You'll get whipsawed out pretty damn quick. So you have to put a wider stop loss on to allow for the buffering that takes place when any currency or currency pair gets up into overbought or oversold. But then sorry, I didn't mean to do that. The benefit to you is that you are in the trade early, and as a result, you're going to be at the start, but you pay a price for that, and the price of entry is a much wider stop loss. In fact, if I go up to the currency heat map, what you'll see here, again, we've got the New Zealand yen right up at the top, and you can use the currency heat map in exactly the same way. This ranking ladder here is much, much slower. It won't move at the same pace as it does on the currency matrix. It certainly won't move at the same pace it does on the currency array. And the reason for that is because these currency pairs up here are weighted. So each of these cells carries a weighting in proportion to where the currency pair sits. In other words, a 1-minute time frame will carry much less weight than a 5-minute. A 10-minute will carry more than a 5, and so on and so forth. So when you get out to the dailies, that will carry a huge amount of weight in terms of where that particular pair sits in the ranking ladder. Now, as this, let's assume these cells are going to start to migrate into a bearish phase and start to turn red, then slowly over time that weighting will increase, and of course that will mean that this pair will actually move, and they'll start to move up and down the ranking ladder. To put it into context, if you're looking at these sorts of trades off this sort of time frame or this particular indicator, you're looking to hold these for days. because what you'll find is that a pair at the bottom might move 1 or 2 spots in a day, perhaps. Over the course of 2 or 3 days, it might move up 5, 6 slots, something like that. This is not going to move up and down like a 5-minute currency matrix or a 5-minute currency array, purely because they are all weighted according to the time. And if you think about it logically, it makes sense, because why would the change in sentiment on a 1-minute time frame be as significant as a change in sentiment on a 15-minute time frame or in an hourly time frame? And that's basically the essence of what we've done. These figures in here will align with the currency matrix. It's a visual way of giving you an instant snapshot view of what is going on in terms of the changes in sentiment, which will always start in the fastest time frame. Everything always starts in the fastest time frame. Whether you're on a 1, 5, 10 or whether you're on a 15, 30, 1 hour, it will always start in your fastest time frame and ripple through to your slows, which is why we always say you've got to use multiple time frames. And it doesn't just apply to the charts, it applies to the indicators as well. That's what I've got. I've got the New Zealand yen up here. This is on 60, so I've got a 60-minute CSI. So my eye is instantly drawn up at the top here, the New Zealand. What have I got to match it with? Well, I've got the yen down here. Alternatively, I could go for the Swiss. We have a whole basket of yen pairs at the moment, being long yen for months, long yen pairs rather, selling yen for months and months. It's a big basket, and it's still producing a lot of dollars every day. And we're still sitting in that, and that is purely driven through the sentiment that's driving the US markets, which is why we pay close attention to what is going on. In fact, while I'm on that point, just to very quickly hop over onto the, there we go. This was the price action yesterday, pretty significant. What is that telling you? Well, it's telling you only one thing, really. That's a massive amount of buying. The market was basically, it was a shakeout yesterday, huge shakeout. Traders selling into that, dumping stock, goodness knows what going on, and then bang, this volume comes in. It's a huge amount of buying in there. So we're looking for possibly a repeat today, maybe, and then a shorter medium term, looking for that to recover. So that's where we are, pretty much the same across all three. This is the YM, the NQ, and the ES. Go into those in more detail in the next webinar. But basically, that's where we are in terms of risk. We go back to the, where are we? There we go. This is what we've got at the moment, the New Zealand yen. And if you're a scalping trader, this is 15-second. Great little trade. The trend monitors come off, bright red, supporting you in that, down to the VPOC, bit of a pause there. Resistance overhead with the accumulation distribution. We've gone through that potential support region there, which is on the blue one, pretty strong. So you've got some decent protection in there. But it just shows you that, there'll be traders in there quite happily scalping away on a pair that has been universally strong so far as today has been concerned, but it's just starting to reach that overbought and oversold state down here. And it's a question of which one you'd look at, whether you look at New Zealand yen or you'd look at the New Zealand Swiss. What is nice to see in terms of these two at the bottom, and ideally I'd like to see the dollar down there, and that really does, if you like, give you even more comfort when you've got three risk currencies all moving in the same direction, and equally so when you've got the commodity currencies up at the top. I mean, they are no-brainer trades because you've actually got the whole weight of the market aligning perfectly, if you will, a perfect storm, if you like, where you've got commodity currencies at one extreme and you've got risk currencies at the other. And then you know for sure that however you construct that particular basket, then as long as it's spread across them, it doesn't really matter which ones deliver. Because on this scenario, if you went, for example, New Zealand yen and New Zealand Swiss, one of them could deliver and one doesn't. You never know, they may deliver both deliver equally. But if you've got more choice in the basket, and basket trading is something we cover in detail in the program, it's a great way to trade. It spreads your risk. There's several rules, but the primary rule is you don't cherry pick them out. You basically close the whole lot out, good, bad, or indifferent. It's as simple as that. And that's basically the overlying mantra for trading baskets, if you will. So that's on 15-second. Nice little trade there if you're a scalping trader. Looks nice. You can see the sort of little bit of weakness coming in. We had an up thrust here, good volume under there. What's that telling you? Well, it's telling you a little bit weak. It's not looking particularly strong. We had more weakness here, a little bit of a reversal, 2-bar reversal here. In we go. And what's nice about this is through this region here, it's not huge, obviously it's only 2 or 3 pips here, but the principle is the same. Once price action gets to an area such as this where you've got low volume nodes and low volume concentration, you expect the market to go through there pretty quickly, and it does. That is what you're looking for. It's the other side of support and resistance. Support and resistance of price using price base, which is what these levels are based on, the accumulation distribution, just looks at it through the prism of price. What volume does on the volume point of control histogram is it looks at it through the prism of volume in exactly the same way. So if you've got high regions of volume, then you expect the market to congest. If you've got low volume areas like this, you expect the market to slice through there pretty quickly. And the trend monitor, just a great indicator, helping to keep you in, because the one thing that causes traders, the biggest problem in trading is not really about understanding how the market works. It's not really understanding the mechanics of trading. It's having the ability to stay in a trade once you've got some decent profit in there and not being shaken out. And that's what the trend monitor has been designed to do, to give you that confidence. But again, it's a question of using it in multiple time frames. You can see it across the top here. We're already bearish in 15 seconds. We've moved to bearish in 1 minute. We've gone through the classic bright blue into, we didn't have a dark blue there, into darker red, and out the other side into bright red, trading down the volume point of control. So in terms of this guy over here or this lady over here trading on scalping, it's a question that you know, it isn't going to go much further at the moment, because we've now got down to the VPOC on 1. We're trading around the VPOC on 3. We're down at the VPOC on 5. So the VPOC is everywhere. So, you know, don't expect this trade to just deliver straight through. It isn't, because it's going to be held up. And always remember that a slower time frame, whatever aspect of that particular time frame you're looking at, will always trump a faster time frame. A slower time frame, the technical aspect of a slower time frame, will carry much greater significance above a faster time frame, because it has the issue of time involved with it. And whatever aspect you're looking at, whether it's support and resistance, whether it's volume, whatever it is, it has that aspect of time which per se will carry more weight. If we go up onto 15, why are we seeing the pause point? We're seeing it because we had a volatility trigger here on the 15-minute time frame way back here. We've been trading, really haven't got away from that at all. It's still bullish, but we are up at that very high level of overbought and oversold. And sorry, just to go back to that, this is what I meant. You know, you might well have put a trade in here somewhere, seen it right up high on the CSI and thought, right, okay, I'm going to short this now, and maybe looking at it on the hourly time frame, think, right, I'm going to stay in here for the rest of the day, looking for reversal, blah blah blah. You've got to sit through all this. You know, this is painful to sit through, and that's the reason you have to have a much wider stop loss. You cannot have tight stop losses on here. It just doesn't work. I can tell you that for sure. Done this long enough. This is the pound up here. You can see the pound selling off strongly, and that's why, if you go remember back to the currency array, that's why the pound yen is not a weak trend. It's not the strongest trend. It's starting to weaken because you've got the pound falling and you've got the yen falling as well. So when you get two currencies moving together, then the trend is not going to be very strong, if any trend at all. Sometimes you will, depends on the strength. You can get two currencies moving in the same direction, and one of them will be moving much more quickly and have more momentum, in which case you will get a certain amount of trend, but you're not going to get anything like the amount of trend you will see when you've got one currency which is selling off strongly and one currency which is being bought strongly, or vice versa. Let's just hop on to TradeStation for a moment. This is basically what's going on with the pound. This is on TradeStation. This is TradeStation with Interactive Brokers. So if you have an Interactive Brokers account, you can now hook this straight through to TradeStation using TradeStation Global. So you have the advantage of trading through the TradeStation interface, but also have the huge advantage of using a deep discount brokerage like Interactive Brokers, which covers pretty much all the markets, obviously spot forex and everything else. This is on futures though, so I've got the 6A, 6B, 6C, 6E, and the 6N. So I've got the Aussie, the British pound. This is CAD dollar, not dollar CAD, because it's the inverse, because in futures world everything's traded against the dollar. This is euro dollar, this is New Zealand dollar, and this is Swiss dollar, not dollar Swiss, so this is Swiss dollar, the inverse, which is why the numbers look a bit strange down there. But basically using the radar screen option, as you can see, I've got this set up for just a handful of timeframes here, but you can have it set up in whichever way you wish. It gives you so much flexibility in terms of flicking through. I've got it linked over here in terms of symbol and interval. So you can literally, you could go through the whole lot in about a minute and just pull off what's going on. It also gives you, I've got the trend monitor, and I've got the trend dots, and I've got the volatility set up in radar screen. So it gives you a straight heads up in terms of, where have I got a volatility? You can see here down on the CAD dollar, we had a volatility trigger 4 bars ago. The others quite a long time ago, and we've had one down here on New Zealand dollar 5 bars ago on the 1 minute time horizon. What this also gives you in terms of the trend monitor here in this column and the trends as well. Remember what I said earlier, what you're looking for the whole time is for a trend to move from your fastest time frame, 1 minute through the 15. What you're looking at here is, is this moving down the column? And it also gives you a perspective globally when you look at all 5 or 6 of them, is what is the sentiment towards the dollar? Is it universal? You can see pretty clearly it isn't, because the standout one is the pound. British pound is falling nicely, whereas the others are all blue pretty much at the moment. So you want to see universal colors across the radar screen. It just gives you, again, a very visual, very quick way of managing everything. That's what we're seeing on, this is on pound on 5 minute at the moment. This is on futures, remember, but the volume works in exactly the same way. The trend monitor works in exactly the same way. I've got the trend dots on here. Remember, the trend dots will change. They are much closer to the price action. You can see it up here. They start to reverse in color, then they start to come out the other side, gone back into red, down into red, then we go into white, a little bit of white, a couple of blue, then we're back into red again. The trend monitor hasn't actually changed. The only time it's changed over here, it just started to indicate a change here, but it's come out the other side. In addition to that, we've got the volume point of control histogram on here as well. Moving through that, we move through this low volume area pretty quickly. We're into a higher volume region here, moving down into a lower volume region here. And there's very little at the moment to cause this to stop. A little bit of buying coming in down under that last candle there. You can see a little bit of wick there's the lower body of the candle. So you're expecting a little bit of bounce maybe on the next 1 or 2 candles on that particular time horizon. Let me just pull over the trading view, just pop that up. There we go. What have we got here? Right, we're on the dollar here. Let's just pull up the dollar, see what's going on with that. There we go. This is what the dollar's doing on 15. Let's change it over to 5 minute maybe. It's pretty choppy at the moment. It's it's not great strength at the moment. The nice thing again with both NinjaTrader and TradingView, it's so easy to see where you are in terms of time horizon. This is 8 o'clock London time, so it matches your local time. Just coming up to 11:45, 11:50 now, and into 12 o'clock, into the London Open, the US Open fairly soon. So that's what the dollar's doing. That's on 5 minute at the moment. This is New Zealand dollar. This is the daily. Really nice move higher. As I say, we've been in these pairs for a long time now, riding this higher on a basket, which has got 5 or 6, I think, and also we've got the Aussie Swiss in there, which is actually rampaging up now as well. But again, it's patience. That's been over months. We've been holding those, and it also just highlights the fact that sometimes we're scalping, sometimes we've got longer trade stuff on. If you're going to take different approaches, all I would say is it's probably best to split it out into different accounts so you don't confuse yourself with what trade was what. So you know that this account maybe is your out and out scalping. It's grabbing a few pips here and there. You may be doing multiple trades a day, maybe 10, maybe 50 trades a day, even 100 trades a day. Then you have another account which is maybe a slower term. Maybe you have a further account which is like I wouldn't say an investment account, but it's like positions which are really there to take advantage of much longer term trends. And that's kind of the way we split it all out as well, so we don't confuse ourselves. This is back to the hourly again, so we can see we've got New Zealand up here, yen down at the bottom here, Swiss franc. But you can see the Swiss franc's been down here for a while. So it's, it doesn't guarantee you that it's going to deliver all the way up to the top. There's nothing in the rule book that says, oh great, this is down here. So what it's going to do now is going to go all the way up here for me, and the New Zealand is going to come all the way down for me, and that's going to be a fantastic trade. It doesn't work like that. You've obviously got to look at the chart. You've got to see what's going on. This might get halfway down and then two of them reverse, change in sentiment. You'll see the volume coming in, etc., etc. Maybe you've hit a level, maybe you've hit some key support level, maybe you're back at the VPOC on a particular time frame, a strong VPOC on a slower time frame. All those things come into play all the time. That's what you're looking to do constantly. But what this gives you is it gives you a heads up of where to go and search. It's like the currency array, it's like the currency heat map, the matrix in exactly the same way. In fact, speaking of the matrix, let me just flick over. I think it's on this one. Here we go. Anna mentioned earlier on about the heat map. We had a few issues with it. This is the matrix we've done, and this is the array, ticking along quite nicely, working beautifully on the trading view. And as I've said this many times before, if you invest in the trading view package, the full package, which is currently I think at something like $677 off the top of my head, once these indicators are released, you will get them free. If you've invested in the package, you will get all these free. That's the array, the matrix, the heat map, which are not available at the moment. Then you'll get the VPOC and the support and resistance, and also the Renko, which we'll develop as well. So you'll get all of those indicators free. We've had quite a lot of people sign up on the education program through the trading view options for that particular reason, because you are saving a bucket load of money and you're getting all these as well. But this is the matrix, and just what I wanted to show you here is on the left-hand side. This is not available on any other platform yet, but it will be, because what this is telling you is you're at an extreme, and the value of that extreme is important, because what this gives you a sense of whether we're actually at an all-time high here of 32.99. So what it tells you over here is this has got a little way to go. We're at an average. We could actually get to an all-time high, and exactly the same down here. What have we got? We've got 17 here, average is 27, all-time low is 41. So in terms of where this is pretty low, this is pretty high at the moment in the context of how much further it's got to travel. It just gives you a benchmark. It's very, very similar to the levels you have on the CSI, which give you a sense of these, for example, these level here at 80 and at 20, which give you a sense of whether we're approaching an overbought or oversold state. And it's exactly the same here, just gives you a view on that. And we will roll these out obviously onto all the other platforms as well as we go along. In terms of heat map, we'll say a bit of an issue, a bit of a limitation. I won't bore you with it in total in terms of what we can and cannot do in terms of heat map, but what we've basically come up with is the option to have a fewer number of cells, but the option to actually choose your timeframes, because there's a huge array of timeframes on TradingView, as you probably know. You've got all of these, you've got down into seconds and right the way through. It's brilliant. So that option will be available on the currency heat map, but only on TradingView for the time being. And it was a kind of workaround, and we looked at it and we thought, you know what, this is actually a great feature to have on here. So that will be coming along, working on that right now as we speak. So there we are. Let's just pop that out of the way. Still holding up the New Zealand yen. Let's pop that out of the way over there. There we go. Saw that little bit of bounce coming in on cable there. That little bit of buying coming in. It's what you expect to see, and that's what VPA tells you. It basically tells you what is going to happen next. What is the probability of which way this price action is going? If you're in this short and you see this coming in, what are you expecting? And the other thing was a bit of a giveaway with this as well. If you look at the volume here under these three candles, what's actually happening? The volume is falling. So what have you got? You've got falling volume, falling price. What is that telling you? It's telling you that the selling pressure is drying up. In other words, the sellers are moving out of the market and now being replaced by buyers coming into the market. Because we're all familiar with the concept of price requiring effort to move high. We throw something in the air, we put a rocket into space. Well, it's going to take effort to do that. We're all familiar with that. So the concept of price action moving higher requiring effort is something that is intuitive. The concept of something falling requiring effort is not intuitive, certainly in terms of a technical environment at any rate. So it requires effort. So for a market to fall, it requires effort. And you've got a similar sort of thing going on here, where the market was falling, but the volume was also falling away with it. So it's no great surprise. It doesn't automatically mean that the market is just going to do that and reverse and you'll have a trade to the upside. But what it does mean is you expect to see some support coming in, maybe some congestion, maybe a little bit of buying going on, which you've got here. Is that enough to reverse this trend? Then you'll be looking at slower time frames to figure that out for yourself. And obviously in due course, you'd see the trend dots start to change, the trend monitors will start to change, and you see maybe a change in the volume profiles as well. Right, I think that's, I think I'm just going to pause there. And you can see here on, just going back to the trade stations, well, again, you can see what's going on here now. You can start to see, it's quite interesting. On Aussie dollar, we're all blue. So in other words, trend monitor is blue. So we've had a transition from 1 through to 3, 5, 10, and up to 15, all in agreement in that slab of price action. We drop down onto the pound. What you're seeing over here is really the first signals of that, because this, if you remember, this was quite red. All of this was red, but sort of standouts from everything else. But what we're actually seeing now, it's just a straight visual without needing really to look at it, is you can see that all of these others are blue. So in terms of what is going on in terms of sentiment for these pairs are all consistent. It looks as though the pound may be joining those. So in terms of what is going on in the sentiment at the moment, we've got the dollar here, which is falling quite strongly, certainly on 5 minute at any rate. And if this continues, then you will start to see this develop. So the next one you're looking for is the 3 minute to roll through into blue on up to the 5, 10, and straight down to, I've actually got 30 here, which is quite a long way out. These are all on 15. But it just gives you a very visual perspective, and of course you've got the volatility over here. So if you're trading on multiple time frames, you want to know whether all the volatility is coming in. You've got it all visually down here. If you get one come in, you can go and hunt it out. If you're in a position, you can go and have a quick look at it. Okay, right, I'm going to close out, sit tight, wait for this to settle, and then I'm going to jump back in again, whatever you may do. Let's just see where the New Zealand is. Still sat up there. Let's have a look at a slightly slower time frame. Okay, 3 minutes. It's patience. You have to be patient if you're going to trade off these reversals. The yen could stay down here oversold for a long, long time, and the New Zealand could stay up overbought for an equally long time before that actually reverses. But at some point they will reverse. They have to, because this is a market of mean reversion. It's as simple as that. This is where you'll find all the bits and pieces. This is quantum trading education. I know we've got some students here today, so nice to have you with us. The complete forex trading program, that's what we've called it, because that's what it is. It basically covers everything you need to know to trade these markets with confidence. All the modules are listed down here. Psychology is where we suggest you start, purely because if you understand yourself, both your strengths and your weaknesses, then you will be able to align yourself to that approach which suits you. If you're trying to force yourself to do something which you're uncomfortable with, then you're not going to succeed. You have to find your comfort level, what suits you as an individual, and that's why we always suggest you start with the psychology module. You've got the fundamental, relational, huge technical analysis module, big mechanics of trading module, and you've got something like 250 hours of video down here, resources, webinar, library, topic webinars where we go through individual topics and how to approach it, pulling it all together, how to use the indicators, of course, and a massive section on VPA chart examples, a deep dive into VPA and everything else. And of course, it's all backed up with the VPA chat room, which Anna and I are there all day, so you can ask questions, be other students in there who will also be able to help you and answer questions too. There's some very experienced traders in there now, I can assure you. We've recently added the funded forex program to that, purely because we wanted to give our students, and it's only available to students, not available to anyone else, sorry, only available to our students, the opportunity to leverage that knowledge. Basically, it's all very well having that knowledge, but if you can't leverage it, then it's almost an academic study, if you will. Hence, we've bolted this in. You can trade our money at no risk to you. You're trading our money, so the risk is on us, and you can trade from a 5, 10, or 15,000 evaluation account right the way through to 2 million. You choose where you start. It's either 5, 10, or 15,000. You have to achieve a very achievable target, very realistic profit target. You get a percentage of that profit back. So if you start with a 15,000K account, you'll have a simple target to achieve. Once you've done that within the the rules parameter that we lay down, we then multiply that by 4. So if you start with 15,000, we give you 60,000 as your next account. You move up to become a portfolio manager, and thereafter we double it. So it goes 60,000, 122, 44, 80, right the way through to 2 million. We pay you back, we rebate profits back to you monthly once you're on the higher level of account. So you'll be earning monthly for your achievements, and that comes back at 50%. And when you get up to the $2 million level or the $1 million trader level, we rebate at 60%, and it's a very, very healthy income once you get up to that level. The evaluation stage is there for one simple reason. It's for you to prove to yourself that you have the consistency to trade and can produce results consistently, and that's what we're looking for. Once you've done that, then we give you a lot more money. But as I say, it's all with no risk, but only available to our students. This is where you'll find all the indicators, quantumtrading.com. TradeStation, TradingView, NinjaTrader, MetaTrader 4.5. As I say, on TradingView, if you've invested in the full package or you're going to invest in the full package, you will get all those other indicators free of charge. That also applies to any other of the packages on offer there as well with the other platforms. If you buy the full package, then all future indicators we develop you get free of charge. It's as simple as that. One other thing I should point out, even if you only buy one indicator, or maybe you've bought 1 or 2 indicators in the past from us, we will always give you a credit against a future purchase. So if you decide you want to upgrade to a full package, we'll give you a credit. If you decide you want to upgrade to the education program, we'll give you a full credit. We give you a credit for anything you purchase with us. This is where you'll find out all the analysis over here, all the links to all the sites, all the books here are up on Amazon, both in Kindle and also in paperback version. We've literally rolled out a new publisher in Vietnam that's absolutely going a storm. It's topped the charts there, #1. It's very humbling, I have to say, and the publisher is absolutely thrilled to bits. And this is in the space of about 3 or 4 months. They're also rolling out the stock trading book in Vietnamese as well. So we've now covered China, Japan, Taiwan, and Vietnam. So it's very humbling, and it's a great pleasure to see publishers doing well with the books. That's it. We're going to run along. We've got another webinar in 3/4 of an hour. So we will see you then. Thank you so much for coming along today. Hope you've enjoyed it. See you soon, and bye for now.